Imagine a company trading at a market value of 1 lakh crores. And imagine you have the capacity to buy that company entirely. Means you have more than 1 lakh crores. When you're making that decision to buy out that whole company, the most important and the first question you will ask is, how good is the business? If you don't like the business, forget buying the whole company. It's not worth buying even one share. Share is of course a part ownership of the business. Yes, management and valuation are important. But a good management may not be able to do much in a business with bad economics. And valuation, of course, depends on the quality of the business. To help identify and make a portfolio of good businesses, Bajaj Finserv AMC is launching the Bajaj Finserv Large and Mid Cap Equity Fund with Moat investing strategy. Let's understand Moat investing a bit. There is a fort in Rajasthan, Bharatpur, the Lohargarh Fort. This is the only invincible fort in India. Named as the Iron Fort, Lohargarh, it was built in 1733. A lot of enemies tried to attack that fort. The British laid siege on that fort many a times, but they were never able to conquer that fort. The reason is the large and deep moat around that fort. The enemies could not cross that moat, and even if they tried to cross it, they could not then climb the wall. So this moat protected this fort from many attacks from the enemies. Businesses also get attacked by competition. A business that is generating superior returns, superior profits, obviously will attract competition. And once the competition comes in, the business will lose market share, profit margins, or growth. But there are some businesses that are able to protect their business from competition. These businesses have a moat, a competitive advantage that helps them protect against their competition. The term business moat was first used by Warren Buffett. It was then popularized by Morningstar. A business moat means a competitive advantage of a business. This competitive advantage helps them protect against competition and avoids competition affecting this business adversely. It helps defend market share and profits. Companies with strong business moats often enjoy very good cash flows and good return ratios. What are the different sources of moat or competitive advantage? The source of competitive advantage can be intangible assets, like a brand that customers trust and repeatedly go there, or patents and licenses, like in a pharma company maybe. It can also be certain innovations that gives the company an edge over its competition. Sometimes it can be a very big scale advantage. The company is producing a huge amount of volume of a particular product, and they can price the product better than anybody else in the competition. It can be switching costs. A customer may find it difficult to switch from a service of X company and go to its competitor. Sometimes it can be cost advantage in terms of sourcing raw materials, where the company can price its product better than the competition or enjoy higher profit margins. Sometimes even management can be a source of competitive advantage, but that's a very narrow moat or slightly weaker advantage. Why is it important to understand moat investing and competitive advantages of companies? Moat investing helps identify companies that are long-term winners. These companies typically lower your chance of a permanent capital loss. These are businesses that keep increasing their intrinsic value year on year. It helps identify companies which can also swim through some short-term troubles. And companies which don't have any moat or competitive advantage, unfortunately, are always vulnerable. How do you identify companies which have a strong competitive advantage? The good news and the bad news is that there is no shortcut. There are no ready-made screeners or quants you can use to come to companies which have strong competitive advantage. This is entirely a bottom-up, company-specific exercise. So how will we do it? While there is no map to go there, but there is a compass that gives us direction. Companies with good market share or profit share in an industry have a possible chance of having a good competitive advantage. There could be leaders or emerging leaders in an industry which can point us to some competitive moat. Also, ratios like return on assets, return on capital, return on equities. If there are companies that are sustaining these ratios for a long time, they possibly have a competitive advantage. Why should you think about moat investing now? Well, this is an investment strategy that can be looked at any point of time. It gives you access to high quality businesses, good businesses that can sustain their profit growth and valuation over a long time. But it becomes more important as we have started in 2024. The Indian markets have given 8 years of consecutive positive returns. We have stepped into 2024 with valuations which are close to fair and reasonable. It is very important now, when we are paying reasonable valuations, we identify businesses that can sustain these valuations and sustain this business momentum. Hence, moat investing is a quality investment style that becomes very important here on. Presenting to you the Bajaj Finserv Large and Mid-Cap Equity Fund, where we will use moat investing to create a portfolio of right businesses.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.